Okay, a little bit of a breaking news emergency video. If you haven't been watching the news today, the United States and Israel have officially started the bombing against Iran. They're calling it essentially Operation Epic Fury, right? Massive coordinated strikes across the entire country. 24 provinces hit. Iran's navy, they're trying to fight back, but they're hitting their missile infrastructure. And Ayatollah Khamenei has actually been hit as well and confirmed dead. Um, and there's reports that a senior official have been confirmed dead too. So this has started, right? There's no denying it, but now officially we are at the start of what seems like might be, maybe not, hopefully not, a prolonged war, right? It's not a limited strike. It's a full-scale operation at this point. So in this video, I'm going to walk you through what happened, which you might know, what history tells us about how stock markets react to this. I promise you, it's really not what most people think. And then why the Strait of Hormuz, you've probably heard of it. If you haven't, I'll get into it. Why that makes it particularly and uniquely dangerous in terms of what is happening with the economy and how you should be thinking about all of this with respect to your portfolio. And I just want to call it out, portfolios don't mean everything. But again, this is what I tied to in the channel. So we're going to tie it in to the stock market, to the economy, and what that could potentially mean. It is tragic seeing war start, so I'm not condoning that. But here's the cold stones. The U.S. Israel launched Operation Epic Fury earlier today, coordinated strikes against Iran. 24 provinces hit. The Red Crescent is reporting, I think, about 200. The Red Cross, pardon me, is reporting about 200 killed so far. Trump's stated objectives are essentially to destroy Iran's missile industry, annihilate their navy, prevent them from getting nukes, regime change. He's explicitly said that, right? It's not ambiguous. It's not posturing. This is a full-scale operation now at this point. And so the White House rationale, to be fair, and you should know the context, is that Iran was reportedly rebuilding its nuclear capabilities after last year's Operation Midnight Hammer. And the U.S. intelligence apparently showed Iran was actually planning preemptive strikes on American troops in the Gulf. And that's the argument, at least. So the argument is it was defensive. We don't know, preemptive. You can decide for yourself whether you believe that. And so here's where it gets really interesting for markets. It's serious for markets. So Iran is retaliating, right? So right now they've fired missiles against Israel, and they've hit bases in Bahrain, in the UAE, Dubai's airports, people killed in the UAE, Jordan too. This is a back and forth active two-way combat happening right now in the Gulf. And 8+ countries in the area have closed their airspace, right? It's a total near total internet blackout in Iran. Some people have Starlink, but the country is dark. And this is a big one for your portfolio. The Strait of Hormuz is reportedly closing. I need you to understand what that means, right? 20% of the world's oil goes through the Strait of Hormuz. So we're going to come back to that because that's the thing that makes this very different from every other geopolitical event so far that we've lived through, in the last little bit at least. And look, I know I've already said this, I'll say it again. I know it's heavy, reports of all the bombings and people killed and that stuff. I don't want to just talk about markets when people are dying, but the channel is about helping you think about our money and our investments. And so I think the most useful thing right now that we can do is go through a framework and so you don't make a bad decision with your portfolio. So that's what we're going to do. And so here's one thing that I think is actually going to generally surprise a lot of you. And I looked through some of the stats for this because the instinct right now, gut feeling, let me know in the comments if you agree or disagree with that, is war means markets crash, right? War means sell everything. War means hide under the bed, right? But here's what history actually shows us. It went through every major military conflict, for most of them, and geopolitical crisis since World War II. And check this out. Go all the way back to Pearl Harbor, right? A little bit more of an immature market back then, but December 1941, right? Japan bombs Pearl Harbor, World War II. How much did the stock market drop? It was 3%, and it recovered within 1 month, right? Cuban Missile Crisis, 1962. It was literally on the edge of a nuclear war, the world was, right? And so the market dropped, I think, 7% and recovered in like 2 weeks, okay? Gulf War, 91. Iraq invades Kuwait. S&P dropped about 20% in the lead up. But when the war actually started, it actually rallied about 40% in the following year. Like nuts. 9/11, right? Worst terrorist attack in American history. Markets closed for 4 days. You guys remember that? When they reopened, though, the S&P dropped 12%. 12% in 5 days, right? Sounds awful, to be fair. But it recovered within 2 weeks. 2 weeks. Iraq invasion in 03. Initial drop, then a 5-year bull run. 5 years up until '08. Russia recently with Ukraine, right? February 2022, everyone thought that was the one, right? That it's going to crash everything. S&P dropped about 3% on the day of the invasion, and it recovered within 1 month. So it went flat, covered within 1 month. COVID, it's a little bit different, right? It's a pandemic, not a war, but it is a crisis. It was. Markets dropped 34% in a month, right? Fastest crash in history, and it recovered in just 5 months. And we're back at all-time highs, as everyone remembers. So you see the pattern, right? And the most single important line that I'm going to say in the video is basically this. Investors hate uncertainty more than bad news. Sad reality. So once the fear becomes reality, once the thing you were scared about actually happens, markets stabilize. Weird, right? Think about it. The worst period for markets during the Gulf War wasn't actually the war, it was the months before. Same with Russia, Ukraine. Same with Israel and Gaza. Right? Because when everyone's wondering if there's war, that's one thing. But the moment that first bomb drops, uncertainty for investors are gone. It's like, okay, it's happening now. Like, this is what's going on. So like the market knew what they were dealing with. And ironically, it rips higher. Weird in a really messed up way, to be fair. And so it's super counterintuitive about the markets in conflict. And the anticipation is far worse from the event. Every single time historically. Now, what does this mean that you should all be going into right now, right? Like, should you be going into this stock? No. Should you be going all in? No, that's not what that means. And obviously the situation has more of a wrinkle than other situations had. I'm going to get into that here in a second. But the raw historical data, the point I'm making is pretty clear. Wars do not crash the markets, at least not for long. And so here's where I want to throw a wrench into everything I just said. Okay? Because there's one very different thing about this Iran situation that is, Strait of Hormuz. That is it. The Strait of Hormuz. So it's this, essentially, if you don't know what it is, it's this body of water. It's this narrow waterway, right, between Iran and Oman, about 21 miles wide, something like that. I mean, big, but like pretty narrow in the grand scheme of things, right? And this tiny strip of water through it flows 20% of the world's oil supply. 1 out of 5 barrels of oil flow through that. That's insane every single day. So Saudi Arabia, Iraq, Kuwait, UAE, Qatar, all of their oil exports all flow through the strait. And as of right now, it is officially closing. Maybe I should say reportedly closing, because that's what Iran has said. Now, let me explain why this is actually different from like Russia, Ukraine, or 9/11, or Israel, Gaza. Because in those situations, the conflict didn't actually threaten the physical infrastructure of the global energy supply, right? Even Venezuela, it added oil to the supply. But Russia, Ukraine disrupted, of course, natural gas to Europe. I think we all remember that. But we're talking about 20% of the world's oil supply being cut off. That is a completely different animal. And so if the strait actually closes and stays closed for any meaningful amount of time, and that's a rule we'll find out in the next few days, oil could spike massive. 120, 130, maybe higher, right? Some analysts are even saying like 150 might be not out of the question. And so there's this cascading effect that affects our portfolio. So oil prices spike, gas spikes. That feeds directly into inflation. And what has the Fed been doing, right? They were trying to bring inflation down. So if we're talking about rate cuts, everyone's talking about rate cuts. Well, if oil goes to 130 or 140 and gas hits $5, $6, $7 a gallon in the States, the Fed can't cut rates at that point. In fact, actually, they might have to raise them. But anyways, we don't have to get into that kind of very scary situation. Because if they raise rates, obviously it's bad for stocks, bad for housing, bad for economy broadly. So the thing actually not to watch right now, with respect to your portfolio, again, I want to preface that, is not actually the bombs. It's not the missiles. It's not even this general or that general. The thing just to watch right now, economy speaking wise, is the Strait of Hormuz, right? Because if it reopens quickly, whether it's due diplomatic pressure or maybe the U.S. Navy secures, I don't know. This plays out like every other war scenario. Initial drop, probably really quick recovery move. If it stays closed for weeks or months, that is a fundamentally different situation. We'll monitor that on this channel. So hit subscribe. By the way, I just want to say in the long-term angle here, and I think this is actually really bullish, every time oil spikes, it accelerates the transition, like we talked about, to EVs, renewable energy. Like it happened in the 70s with the oil crisis. Japan started making fuel-efficient cars and all that stuff after. And it happened in '08. Every oil shock in history, I think if you look back to it, has pushed the world closer to energy independence, nuclear, whatever it might be. So if you're on a 3 to 5 year horizon, and this actually happens, that's actually a massive accelerant for clean energy, EVs, battery storage, solar, nuclear fission, like whatever it might be. So in the grand scheme, oil crisis is actually forced the world a little bit to change. And this could be a huge forcing function that we're seeing. Okay, let's zoom on even further than this, because I think if you only look at this as the Iran war, oil prices, what happens to stock, again, I think we're missing the bigger picture. Like, this is the third major geopolitical conflict in 4 years. Russia, Israel, Gaza, obviously Venezuela, actually maybe even fourth with China and Taiwan, some ramping up pressure there. But this is essentially deglobalization in real time in front of our eyes. If you look at the last 30, 40 years, the global economy was built on this assumption that basically everyone could trade with one another, right? Cheap goods from China, cheap oil from the Middle East, cheap labor, supply chains that essentially go across the planet. And that world is amazing, but that world is completely dying. It honestly might even already be dead. Tariffs and all this sort of geopolitical risk. So if you think about it, like, what's replacing that? And you're seeing regional blocks at this point. Like, the U.S. is shaping their alliances, right? You see defense spending surging, like NATO's defense spending is surging, like finally hitting 2% GDP targets. Even Japan is like rearming for the first time since like World War II. Saudi Arabia is spending billions, hundreds of billions on military. And like, this energy independence story is becoming an like existential priority for every major country. It's no longer a nice to have. It's not like we should probably think about renewables. Okay, this is an existential national security priority for us. And so actually, here's where I think Iran's situation actually gets really interesting from a chess move. Because if Iran's remaining regime, that is, actually falls, it's a big if, but if it does, there's already anti-government protests, right? We already know this happening at pretty much every big city in Iran or universities, like people saying, I love Trump, I love USA, and cheering in the streets for this. And there's like a split in the country. But if the regime does fall, it completely reshapes the Middle East power dynamics, right? Iran historically has been like a huge backer of terrorist organizations like Hezbollah, Hamas, Houthis in Yemen, militias in Iraq. And so all of these proxy conflicts, all of the instability, it's funded and supported by Iran, right? Or the government, not by the people. And so if the regime does change, you could see way more stability in the Middle East long term. Which, ironically, if you think about it, could actually bring way lower prices in the long term for oil, right? Lower inflation, more rate cuts. Like, you can cascade this in the other way as well, should the regime fall. And it is wild to think about it that way. And to be fair, like, the regime operations there's a mixed track record with regime changing operations. Take Libya, Iraq, Afghanistan, not exactly success stories, especially Afghanistan as of late. So I'm not sitting here saying, okay, this is going to be great, it's going to be easy. Like, but what I'm actually saying is, like, the range of outcomes is really, really wide here. And that's actually really important about how you think about your portfolio, because wide ranges of outcomes mean you shouldn't actually make big bets in either direction as of right now. And by the way, this isn't just happening in a vacuum either. Like, NVIDIA just reported earnings, like SpaceX IPO, like the Fed is still navigating inflation. Like, there's so much happening in the markets just beyond Iran as well. And the macro picture is so messy, super messy. A lot of volatility, a lot of premium is baked into options. It's hard to make big bets. Messy doesn't mean bad. It just means volatile, right? And so after all of that, all the history, the oil, the geopolitics, like, what should you actually do? And again, I want to be really clear. I'm not giving you soft picks from some idiot on YouTube, right? But the way I look at it is through a framework. And I think the biggest risk right now is actually not the war. It's us making a bad decision because we're emotional about something. And so here's what I'm thinking about in kind of three things. Number one, don't sell in a panic, right? This is the most important thing that I can say, right? There's a famous stat, right? Everyone knows it. If you miss the 10 best days in the market over the last 20 years, your returns are cut in more than half, right? And that's massive. Isn't that, like, just sit on that? And you know when the most best days are going to happen, don't you? Obviously, we don't. I'm being facetious. Like, no one knows when the best days are going to happen. But they often happen right after the worst days, right? They kind of cluster together. And so if you sell a big red day because you panic about the war, like, and the market rips the next day, you just locked in your losses and you missed the recovery. So that's the worst possible outcome you can have. It happens to people every single time there's a crisis. Every single time. The second thing actually to watch is oil and the Strait of Hormuz, right? I've said that. Not Of course, casualty outcomes and stuff like that matter and whatnot. Well, we obviously care about people. But with respect to portfolios in the economy, like it's oil. If oil stabilizes or comes down, this is a kind of a garden variety scare, right? And the market will treat it like that. If oil stays elevated or goes higher, that's when you need to start thinking about second order effects. I'll break that more down as it comes or if we need it, I should say. But inflation, Fed, rate policy, that comes downstream from all of that, right? The actual signal in all of this is that oil prices. Everything else is headlines. The third thing it's quite important, is have a plan before you open your stock market portfolio, right? Decide what you're going to do with the content. Like, not when the market's open, when you're staring at all this red, your heart's racing, like before you see a single headline, like, are you holding? Are you adding to positions? Decide now if you're trimming, whatever it might be. Because the worst financial decisions we make are the ones that we make that we always make reactively, right? Like when CNN or Fox News is screaming World War III and everyone's like, our portfolio is down, it's down 3%. Like, you have to do something. No, that's when people blow up their accounts, right? So the grand scheme of things, and I really do mean this, if you're investing like on a long-term horizon, 5+ years, this is still noise as it stands, right? It's loud noise, it's scary noise, it's sad, but it's still just noise. Like, the companies I own are still going to be there, right? As long as they're not headquartered in Tehran. The products that they're going to sell are still going to exist. The trends that you and I both got excited about with investments are still intact. The wars don't change the direction of technology, right? They don't change the direction of AI. They don't change the direction of innovation. They accelerate it every time. And so stay safe out there. I know it's a scary moment for people in and around, especially with families and stuff like that, feeling the weight of the world. I'm with you. It's quite sad to see any civilian die on either side, and it doesn't matter. But from a market's perspective, don't panic, right? Study the history, understand the oil angle, have a plan. And if you want someone breaking this sort of stuff down as they develop, hit subscribe. Like I said, I'm going to be covering this stuff as it evolves. Situation's far from over. Follow me on Twitter too, or I guess X. I got some comments about that last time at Hey It's Yashu. I'll be posting real-time updates there. And if you want to join the community and talk about this with other investors, the Patreon link for Discord access is in the description. Stay safe out there. I'll catch you next one. Yeah, sign off. Peace.